Welcome back to Fast Market on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hinks. But let's bring in our next guest for our cash tag segment, and that's going to be Landon Swan, the co-founder of LikeFolio. Welcome back to the show, Landon.
Thanks, Tom. Good to be here.
All right, so we're talking burritos, we're talking tacos, we're talking fast casual Mexican food here. And Landon, you know, the Chipotle's been able to raise prices. They're expanding their footprint as far as number of stores. But foot traffic's actually picked up, according to Placer.ai, that over the last 3 months, you know, foot traffic remains robust, unlike some of its competitors. What kind of data are you guys seeing out of LikeFolio?
Sure. So when we look at a company like Chipotle, we look at a few things. First of all, we look at consumer happiness, which is actually one of the reasons they're struggling a little bit. They're actually behind a lot of their peers, Shake Shack, Starbucks, even McDonald's. They're behind on happiness. So we're a little concerned there. They've got a 60% happiness rating, which is and the number of happy customers divided by all the customers that have an opinion, positive or negative. So plus 60% is a little bit struggling there on that side. We also look at purchase intent. And that's where someone on social media is basically saying, hey, I'm going to the store, I'm ordering from the app, I'm ordering online, I'm eating at the store, whatever it may be. There's hundreds of ways that we're looking for people to say that. And that's actually declining a little bit as well, about 12% year over year, falling off again behind their competitors or their peers, Shake Shack, I think being maybe the closest one. McDonald's is a stretch. They're a bit of a different company, but Shake Shack and then Starbucks are both doing better, from when you compare it to Chipotle. They're both to the right. They're both higher. That's not where you want to be as far as CMG's position on this chart. And then we actually look at other metrics such as web data and app usage. And when we look at that, one of the things that we're seeing is they had a really nice surge in app monthly active user usage, but it's basically flattened off since then. We've even gotten to the point where we're down a little bit year over year, about 14% year over year on monthly active users on their app. And their website mentions and website visits are down about 2% year over year. Now, that is about 40% of their transactions digital, right? App usage and website usage is about 40% of their of transactions, down a couple of points from last quarter. So people are going to the stores more often than they're ordering online, and that's actually the way that the trend's going. So they're losing a little bit on that as well. I think that their customer base is a little bit more insulated from the higher prices and the inflation concerns, things like that. But overall, people talking about being concerned with the price of food is up 160% year over year. However, people are going more to restaurants, plus 24%, fast food, which I don't know if Chipotle is exactly fast food. It's plus 8%, but Mexican is plus 18%. So even though people are more concerned with these higher prices, they're still going out more than they were a year ago. So Chipotle's kind of got a mixed bag of positive and negative signals along with them. So, I think it's appropriate that their stock is basically in the middle of their 52-week high and low. The range, I think, is from 1,200 to just under 2,000. They're right around 1,600 now. So they're pretty much right in the middle of that 52-week range. And again, they've got some things working for them, but most of the stuff that we're seeing on the consumer data side is actually showing a little bit of a decline year over year. So I wouldn't be surprised if they, had a little bit of a bad reaction going into this, or coming out of this earnings report.
Landon, they had a great earnings report the last time the stock jumped, as Brian Niccol basically came out and said the economic group of people being hurt by the recession is really not their customer, and their customers were were doing pretty well, and their business was doing well. The stock jumped. It's now lower than it was then, mainly because I think the overall market is sold off, but I'm sure some of your data is rising to the attention level but Landon, I used their app during COVID, and I went in and picked up food during COVID, but frankly, I like Chipotle. Now that I can just go in there and order, I don't touch the app as much as almost at all. I just go get it and bring it home. So isn't some of that to be expected now that people are just walking in the stores? And the store was relatively crowded, the one very close to my house. Now that's suburban Chicago. That might not be everywhere. And So what do you think? What do you connect the dots to the difference between data? Is it people going back to the store, or is there a real concerning drop-off? Because if you listen to Chipotle and Brian Niccol, they're growing. They want to go from 3,000 stores to 7,000 in North America. They're also talking about the United Kingdom, France, Germany. I mean, this company is in serious growth mode.
Sure, and I love the aggressiveness, and you said it well better than I could have. I generally, characterize his quote as "our customers aren't poor," but you did a great job with that. But yeah, absolutely, they have done a fantastic job. Long term, I'm very bullish on this company. I would say that what we're seeing in the data is that yes, there is a bit of a drop off in the app usage. You had a surge due to COVID, but even on a year-over-year basis, and I don't think things were that locked down a year ago, in the end of 2021, but even on a year-over-year basis, we're seeing a pullback in app and website usage. However, the purchase intent, as you can see on this chart, that green line is fairly consistent. It's just kind of flat, basically moving along. And so when you look at the overall purchase intent, we've got it at negative 12% year over year, negative 11% year over year, depending on when you cut off the chart. And so I would say that definitely there is a drop off in app and website usage, the digital orders, which is 39% of their transactions. And I think there's probably a small amount of non-growth or slight drop-off in actual in-store visits. So that's what our data is looking like right now. So short-term on this earnings report, I wouldn't be surprised if they had a little bit of a negative reaction. Not hugely bearish going into this one, but we do have a bearish lean. Long-term, love the company. And if it's me thinking about investing, I'm going to invest after this earnings report comes out because I think I can get a cheaper price.
Yeah, Landon, if you look at this chart over the last 3 years for Chipotle, it's still up 105%, even though it's down about 9.5% so far this year. So it's had a significant run here. But the chart I wanted to look at was a scatter plot. Chipotle, the purchase intent versus sentiment, that 30-day moving average, I've never seen it against competitors or other food service companies in this space that low. Is this one of the lowest points that you guys have seen as far as your data goes?
Yeah, I mean, we've seen, obviously, besides like the straight drop off in March of 2020. Yeah, this is one of the lower points, I think. Now it is, on the purchase intent, I'd say it's a little bit more range bound. This is probably the lower end of the range, which is why I'm saying short term, don't like the odds of a good outlook on this earnings report, but long term, absolutely love it. So I would expect that this Chipotle dot to move to the right over time, hopefully to up as well. But I would like to see it, tracking along with a company like Shake Shack or maybe even Starbucks. But yeah, this is the lower end of the scale for Chipotle. It's not a long-term thing. This is not the death of Chipotle by any means. It's just us saying, I don't think this earnings report's going to blow anybody's socks off. I think that, could be a little bit disappointing, and I'd be surprised if it was up significantly tomorrow.
Yeah, and you had that other chart that said the stock prices kind of outperformed maybe some of your data over the last couple of months here. Do you have an earnings score going into this one?
Yes, negative 24. So if you remember, if you're within about 20 points of zero, we call that neutral. So we are just barely on the bearish side of this one going into the report. But again, that is a short-term signal. That's basically for this week only. After that, I do love this company long-term.
All right, great stuff. As always, Landon, appreciate all the data that you bring us on a daily basis. Have a good day.
Thanks, guys. Enjoy your lunch.
All right, that's Landon Swan, co-founder of LikeFolio, breaking down the data.